about stocks this week. The markets end flat after a volatile week. We'll tell you what your investment strategy should be. We'll focus on TCS as a stock of the week, and we'll tell you what to expect from the IT sector ahead of earnings season. And our guest this week, G. Chokalingam, gives you 4 investment ideas for the long term. Welcome to All About Stocks. You're watching ET Now. Now, this is a show specifically meant for long-term retail investors. The market, we've had a volatile week, but we've been tracking it very closely for you. We've done the research and picked the stocks. All you need to do is give us the next half hour, and we'll design an investment strategy for you in these very confusing times. Now, we'll also answer the questions you sent in during the week. Our email ID is at the bottom of your screen. If you have any questions about the markets, send them to us on this email ID. A quick recap of what happened this week. After a volatile week of trade, both the Nifty and the Sensex ended up about 1% for the week. Ranbaxy and Bajaj Auto were the top gainers for the week, while among stocks like NTPC, ONGC and ITC were the top losers. The Bank Nifty notched up about 3%, while the BSE Realty Index was up over 4%. Joining us now is G. Chokalingam, the Managing Director and CIO of Centrum Wealth Management, to help us understand this market a little better. Mr. Chokalingam, it's always a pleasure to have you on the show. I want to first understand from you, as far as long-term retail investors are concerned, what advice are you giving your clients right now?
Certainly, the history of Indian equity market has again and again proved the fact that you can create wealth in the long term only by betting on good value stocks, and most of the time they are not available in the large cap because they emerge as a large cap after the story already unfolded. So therefore, I continue to recommend good value stocks in large mid cap space and a few select small cap stocks, and tell them to invest and hold on for at least next 1 to 3 years.
Well, we are also looking forward right now to the earnings season, and given all of the macroeconomic indicators we've seen over the last couple of weeks, what are your expectations from earnings right now? Do you think investors are going to be disappointed?
I firmly believe that investors would be disappointed. The net profit growth year on year should be in a single digit for entire listed companies. Even for Sensex and Nifty companies, it should be anywhere around 5 to 6%. Because the stress is there. If you look at the indicators like excise duty collection, which is now negative year-on-year growth in excise duty collection, which the excise duty is an indicator of the manufacturing sales. So that gives a lot of stress. And even if you look at the top 100 companies' income tax collections, which was only at around 7.5% year-on-year growth in Q2 as compared to 14% in Q1. So if you take these two indicators, it gives you a lot of fear about forthcoming results. It should be definitely disappointing to the investors.
Now, we should also talk about the rupee. For those of our viewers who are not up to speed, the rupee hit a 7-week high this week. We heard our finance minister come in and talk about the fact that he expects the rupee to settle at around 60 to $1. So, Mr. Chokalingam, do you also agree with the finance minister? Are you that positive on the rupee right now?
The government always has a lot of wishes, but if you look at the reality, yes, I am not too pessimistic about rupee. In fact, we had given long back that the rupee should stabilize at around 62 by end of the current calendar year. But in the short term, in the next couple of months, the rupee can again depreciate to 64, 65 because, one, the corporate earning, and two, the US shutdown issue would be resolved within few weeks, because since 1976, US had 17 such shutdowns. And history says that most of them were solved amicably within 2 months' time. And therefore, in a few weeks, it would be resolved. And again, the US history shows that their markets have gone up substantially, or they recovered substantially after, the issues were resolved within 2 months' time frame. So that also could give temporary cost to the rupee. And third, you had a very good current account balance for the Q1. But, going forward, you are not going to control the import of gold because of the procedural issue. Also, the gold import was curtailed in the last couple of months. So that also would cause a concern. And therefore, I see that there is a possibility of rupee slipping down to 64, 65 temporarily. But certainly, it should come back to 62 by end of December. I firmly believe that, within 3-4 months, the RBI should be able to mobilize adequate amount of dollar through this swap window.
Alright, let's also have a very quick conversation about IT stocks. Gopal has written in. He has 10 shares of TCS, which he bought at 15.27. He wants to know if he should hold on to that stock. Now, TCS ended the week at 2,033. Goldman Sachs has upgraded TCS. In fact, the entire IT sector was in focus this week. The BSE IT index up about 30% in the last 3 months. Let me bring in Ajay first to give us an update on both TCS and the IT sector, and then we'll come back and talk about it. Ajay.
Well, Tata Consultancy Services was one stock in focus this particular week. We saw the market capitalization of TCS cross 4 lakh crore and also we saw some big upgrades coming in. In fact, Goldman Sachs was one of the key brokerages which upgraded the sector along with this particular company. Earnings for financial year 15 have been hiked. Mainly, the weak rupee will continue to aid the earnings of this particular sector, and TCS will be the biggest beneficiary of it. We also gathered that a lot of FIIs have been shifting positions into TCS and moving away from Infosys, mainly because of the patchy performance of fourth quarter numbers or quarterly numbers of Infosys, whereas TCS has been more consistent as far as the earnings growth is concerned. Deal visibility remains quite strong according to some of the brokerages, and demand environment will also continue to remain quite healthy. Apart from Goldman Sachs, even Morgan Stanley, Nomura were the other big brokerages which have upgraded the sector and have key focus on maintain an overweight for Tata Consultancy Services.
Mr. Joklinga, we're talking about TCS. For someone who bought it at 15.27, he's making a good profit at this point. Would you think that there's more to be gained from TCS as a stock, or has it run up a fair amount already? Would you recommend he holds on to that stock?
If investors is looking at beyond, say, 1 to 2 years, one can certainly hold on TCS because it is certain that the revenue in dollar term is going to grow in the single digit for most players, and two, the TCS is stretched in terms of valuation. But however, rupee at 62 means 35% depreciation of currency in the last 2 years. So that itself will be a big positive for IT stocks. And secondly, there is going to be a lot of uncertainty in the economy and markets for next 6 to 8 months. And let us not forget even the forthcoming election. So therefore, IT space as a whole will do well. But if I am given option, I would switch over from TCS to mid-cap IT stocks like CMC, because in terms of the valuation, it is much cheaper than TCS. And I firmly believe that there would be valuation upgrade for mid-cap IT.
Do you have a target of CMC right now?
It's about 1,500 rupees, I believe, it should deserve within a year's time.
Alright, let's move on to another question. Vinod has written in. In fact, he sent in his entire portfolio. He wants us to take a look at it and tell him which of these stocks he should be holding on to and which he should be selling. Right on top of his list, he has Ashok Leyland, which he bought at 35 rupees. Do you expect Ashok Leyland now to, benefit from the good monsoon we've had this year?
It is more than monsoon. The truck business is related to, economic GDP, particularly the industrial GDP. If you look at the automobile space, two-wheeler space gets maximum benefit, and also the tractor segment gets maximum benefit out of good monsoon, whereas the truck business is heavily dependent on GDP growth. And therefore, I firmly believe that there will be a lot more pressure for commercial vehicles even in the next 1 year. So therefore, I would suggest sell on Ashok Leyland. And since he has already lost money heavily, he should go for a very safe bet like a KCP Sugar, which gives anywhere around 5 to 6% dividend yield. And in fact, if they consider the robust performance of the subsidiary, their dividend yield can jump even to 8 to 9% for the current fiscal.
But he also has Bharti Airtel on his list, which he bought at 333 rupees. Now, there's so much policy volatility in the telecom sector, and there is a possibility that a company like Airtel might lose its first mover advantage in this market. Would you recommend he holds on to that stock?
He can hold on. I agree with you. The wealth creation story is over for telecom space. But tactically, this stock has given 355 to 360 upside several times in the last 1 year to 18 months. So I would rather suggest him to hold and sell in the range of 355 to 360.
He also has ICICI Bank bought at 873 rupees. What do you expect as far as earnings are concerned from the banks now?
I still believe that year-on-year profit growth should be anywhere around 16 to 18%. And I firmly believe that the private banks are better positioned to control the size of the growing bad assets, and ICICI would also succeed. And ICICI Bank also can opt for mobilizing dollars through swap window facility. And recently, most of these private banks also corrected a lot. So hence, I would suggest a hold on to ICICI Bank.
Alright, hold on to ICICI Bank. We're going to take a very quick break. If you'd like us to take a look at your portfolio, send it to us. Email ID is at the bottom of your screen. And when we come back on the other side, Mr. Shoklingam has picked out 4 stocks that you can buy at this point for long-term returns. Okay, Matt, you're watching All About Stocks on ET now. It's a very confusing market for retail investors like you and me. It's up one day, it's down the next. D. Shoklingam is with us right now, helping us figure out our long-term strategy. And every guest we have on this show seems to recommend that we should be picking out stocks very carefully at this point and using these opportunities to buy stocks. But we're actually going to ask them to recommend 4 stocks to us that at this current valuation make sense for us in the long term. Mr. Shoklingam, you've done the research and picked 4 stocks for us. Could you tell us what stocks you recommend we buy at this point?
I suggest 4 stocks, namely Glasgow Consumer, Yes Bank, Mphasis and JK Tyre. Of course, out of these 4, 3 are large mid-cap and large-cap stocks. Since I see the opportunity for a lot of volatility in the market for next 6 to 8 months, I suggest that at least there is some tilt towards large mid-cap and large-cap. Once they make money, they can think of shifting to very long-term idea at a later stage. And I have picked up a Glasgow Consumer. Of course, even for very long term, it's a great idea because India, you have seen, the FMCG business always, maintain a significant growth. And the stock has corrected about 20% from the recent peak. And the recent RBI liberalization of policy pertaining to the MNCs increasing the stake within the permissible limit without any approval from RBI is positive for Glasgow Consumer. So there is a possibility of marginally increasing the stake from the market, which in turn can, give good upside in the short term. Otherwise, in the very long term, it can continue to grow its business consistently, and therefore it can create a lot of wealth in the next 3 to 5 years. Second, Yes Bank. There has been a lot of concern on the bank about asset quality. A lot of investors are questioning whether it is, possible to have close to zero net NPA. I firmly believe that the regulator, namely RBI, is adopting a very conservative and cautious approach in the country. For any large bank, it is very difficult to fail miserably. Hence, I firmly believe that it may not be able to maintain zero net NPA, but still, Yes Bank net NPA would be less than 1%. And hence, I would suggest using this current severe crash in the stock price to accumulate, even for short term as well as for long term. Mphasis Software. As I said, the rupee is likely to stabilize around 62, and I don't see any opportunity of rupee going back to 44, 45 because our current account balance is going to be a perennial problem because our structural problem of huge import of crude oil, edible oil, coal, fertilizer is not likely to be resolved in the medium term, even in the long term. Hence, the rupee would stabilize at a very high level, and which means more than 35% depreciation in the last 2 years, which will be extremely positive for IT companies even in the medium to long term. And Mphasis has got added benefit, as I said, being owned by MNC. There is a possibility of delisting or sale of stake in Mphasis by HP. So therefore, I would strongly recommend Mphasis, which is also cheaper as compared to large IT companies like TCS. Fourth one, JK Tyre. It's a purely long-term bet. It's a very impressive company, one of the largest tyre makers in the country. The stock is unfortunately available at just 1.5 PE on 1 year forward earning. It has got a couple of plants in Mexico which are doing extremely well. The profit margin in Mexican operation is very impressive, much more than what they do in the country. And second, if you look at the last 20 years, the amount of money they spent on creating the JK Tyre brand is little more than the current market cap. And if you adjust for the inflationary impact, the intangible asset value should be many times the current market cap. And recently the the rubber prices have corrected about 15% in the last 2 months. And in fact, last year the rubber prices went up as high as 240, and yesterday they have fallen to 165, which is big positive for entire tire manufacturers, including JK Tyre. So I firmly believe that in 2 to 3 years, JK Tyre could be even a multi-bagger.
These are the ones that will give us long-term returns. I want to give you a recap. He talked about Glaxo Consumer, Yes Bank, Emphasis, and JK Tyre. If you have any questions about those recommendations, write to us. Email ID is at the bottom of your screen. I'm going to take a few more questions. Manoj has written in. He wants to buy Castrol India and Tata Steel at this current value, and he wants your approval on whether or not you think it's a good idea. Should he be buying both of these stocks right now?
Castrol is a great company, but if you look at last 2-3 years, the revenue growth is pathetic. I mean, it's not able to grow. And also, if you look at the valuation on 1 year forward earning, it's quoting at as high as 28. I don't, justify such high valuation when the company failed to maintain impressive growth. Probably what has happened in the recent year is that smaller companies like Volatile Technology, Gulf Oil, I believe they started grabbing the market share from Castrol. So therefore, I won't suggest Castrol, even though there is opportunity of getting 5 rupee from the company to capital reduction. But that is not going to change the EPS at all, because number of shares will remain same. And hence, I would suggest the same MNC space to consider a company like AkzoNobel, which is again MNC company, very good dividend paying company. Last year it paid about 80 rupee dividend, and it is also the cheapest paint stock. And hence, I would recommend AkzoNobel. Tata Steel, I would better wait for the results. I still believe that the stress from the forest would continue. And therefore, within the Tata Group, I would recommend a defensive team like Tata Coffee instead of Tata Steel.
We also have a question from Sumanta, who has 500 shares of Canara Bank bought at 350 rupees. He also has Oriental Bank of Commerce bought at 240 rupees. Should he hold on to both of those stocks? What's your recommendation?
I would recommend the sell on both the Canara Bank and OBC. Both banks have increased, seen the substantial rise in the NPS, both gross NPA and net NPA. Outlook looks quite, worrisome. And hence, I would shift from Canara Bank to the most efficient private sector bank like City Union Bank. And the L&T Group has already 5% stake in City Union Bank. And RBI has indicated that they are likely to give banking license in January 2014. And I believe that L&T Finance can grab the license. If that happens, then there is a possibility of tactical, run-up in City Union Bank. And hence, I would suggest. And City Union Bank, if you look at the net NPA, which is hardly around 0.6%, that also gives a lot of comfort. Similarly, OBC, I would stay away from OBC and move to Tata Coffee, which, as I explained, it's a very good defensive team. It's better than the PSU bank like OBC.
When we come back, we're going to talk a little more about City Union Bank, and we'll tell you how Mr. Chokalingam has managed to make a profit of 5% in about a month. Welcome back. You're watching All About Stocks on ET Now. Thank you so much for staying with us. G. Chokalingam is with us right now, helping us make money in the long term. We have a question from Uday, who's written in to say he has about 5 lakh rupees right now. He wants to use it to build a portfolio with a long-term horizon. He wants to know if now is the right time to start investing, or should he wait for the markets to correct? And if he should invest right now, would you please construct a portfolio for him? Now, before I ask our guest whether or not it's the right time to start investing, I'm going to give you a recap of the portfolio he's already designed for us. Now, this is Chokalingam's portfolio. Now, it was designed on the 8th of August this year, so it's not very old. And it's currently given us a profit of 4.7%. Now, the Nifty over the same period has given a return of 6%. So that's fairly impressive. I'm going to give you a list of the stocks on this portfolio. There's ITC, NMDC, RIL, Bosch, Oracle, Clariant Chemicals, City Union Bank, CMC, Tharur Vaishya Bank, Tata Coffee, Barmer Lorry Chemicals, JB Chemicals, and Surya Roshni. Now, Mr. Chokalingam, before we talk about the portfolio, I first want to ask you, for the benefit of Uday who's written in, is this the right time to start investing?
Certainly. As I mentioned earlier, if an investor is going after individual stocks, you need not worry about the index at all. Look at the valuation. And whatever ideas I have mentioned in the portfolio, they are still valid in a period of anywhere next 1 to 3 years. I'm certain that most of the stocks would give very decent return. So therefore, you can follow the entire portfolio. Probably what you can do is that we have seen huge volatility in the market. The kind of volatility we see now is not seen in the past. In a week's time, moving up by 1,000 points and falling by 1,000 points. So at best, what you can do, you can look for such significant market fall or any significant fall in any of the individual stocks listed out in the portfolio. So as and when he gets a good opportunity, he should start deploying the cash as per the proportion mentioned in the portfolio.
Well, that's very good advice. What you can do, make a list of stocks that you're interested in, and they just as well could be the list of stocks in this portfolio. And as you see a cut in those stocks for whatever reason, make sure you pick up some of those stocks. Now, Mr. Choklingam, you must be pleased at 4.78% return in little over a month. But tell us if you like to make any changes in this portfolio. You still chose to keep 25% of your money aside in cash. Would you like to deploy that money at this point?
Yeah, certainly. I mean, I am a little lucky to make a 4.7% return with 25% cash and 65% exposure to mid cap and small cap. Of course, certainly in the long term, I am very confident. I would maintain all the stocks I have. I would not sell any of them. I still see opportunity for upside. What I would do is that I would use this severe correction in the banking space to add further Karur Vysya Bank and City Union Bank. I would increase the allocation for Karur Vysya from 8 to 10% and City Union Bank to 8% from the current 5%. I would add one more large cap stock, namely Glasgow Consumer. I would add 5% at this point in time. Then another very long-term bet, which I believe is a solid potential multi-bagger, namely JK Tyre. I would add 5%. In fact, last couple of days it has shown good amount of momentum in the market. The liquidity has gone up several fold. As I mentioned earlier, the rubber prices have crashed, which is a big benefit to JK Tyre. In fact, the September result also I expect to be very good for JK Tyre, particularly from the Mexican operations. And therefore, for long-term investors, I would strongly recommend JK Tyre with a 5% exposure in the portfolio.
All right, two more stocks added to that portfolio. So now I'm going to give you a recap of all of those names again. This is G. Chokalingam's portfolio. Remember, it's given us a return so far of 4.78% in little over a month. The stocks on this list are ITC, NMDC, RIL, Bosch, Oracle, Clariant Chemicals, City Union Bank, to which we've increased our exposure to 10%, CMC, Karur Vysya Bank, to which we've also increased our exposure, Tata Coffee, Barma Lorry, JB Chemicals, Surya Roshni, Glasgow Consumer, and JK Tyre. Now that unfortunately brings us to the end of this show. Mr. Choklingam, thank you so much for joining us on the show and answering all of our questions. If you have a question specifically for Mr. Choklingam, send it to us. Email ID is at the bottom of your screen. You'll also find a copy of this show on our Facebook page, and you can reach me personally on Twitter. Thanks for watching.